Before we move on, on our next chat, a quick thank you to all of our partners today. Presenting partner, SBI, co-powered by Adani Ambuja Cement, HDFC Life, associate partner Latin Manharlal, crypto partner Coin DCX, housing finance partner LIC HFL, timekeeping partner Just in Time, healthcare partner Zota Healthcare Limited.
And ladies and gentlemen, if you've been taking notes on all that our experts have been saying and the advice that they've been giving, you can share that on social media. Use the hashtags India Investment Summit, and you can also use the hashtag IIS 2026. Now, Shibani, let's move on to a very interesting session as well. Now, the Indian tax and regulatory system is a multi-tiered, complex structure that is currently undergoing significant modernization so that it can improve the ease of doing business and enhance compliance. Very important, very much needed by corporate India. Now, at the same time, tax considerations in mergers and acquisitions play a crucial role in shaping deal structures, mitigating the risks, and ensuring regulatory alignment. So how do we do this evolving tax and regulatory dynamics? How do we understand that? How does it influence investment decisions in India's growth story? To help us understand this, I'd like to invite up on stage Mr. Anil Talreja, his partner at Deloitte India, to share his perspective.
Good evening, ladies and gentlemen. After hearing the buy and the sell, the one thing that I must only say and advise is you can't escape from paying taxes. Again, talking about taxes, and particularly on a Friday evening, I know it's not that easy, but please remember that most of the tax professionals, including me, were working on the Sunday, where the finance minister kind of ensured that all of us were on our toes. What I'm going to do in the next few minutes is just talk to you about some of the bold moves that have been announced in the budget. And the reason I use the word bold moves is because just before the budget was, to be presented, we normally have a usual round robin in terms of expectations from the budget. And many people had, given the geo-economic tension and the political situation, had kind of put their fingers crossed to kind of worry whether is there going to be new amount of taxes that are going to be levied, or is there going to be a boost that will be given to the economy. Now, I'm not going to get into the technicalities of tax, but what I'm going to do is just talk to you about some of the important proposals. And these are directly linked to a common man speaking when you talk about investment in India. What you see here is exactly what I believe has been followed by our government. So much that we had expected that there will be kind of perhaps a move to increase taxes, given that the situation economically and globally is not very stable. I think the finance minister and the government have done a wonderful job, and to a great extent, I would kind of recommend that. I would reckon that when you look at bold moves, this is one of the best bold budgets that we've ever seen. And the reason why I say that, there are a lot of undercurrents in this budget which have not been kind of highlighted to the extent one would kind of look at. The budget speech about an hour, the budget document a few hundred pages, but there are certain nuances which come our way. Remember, in the last 2 weeks, the budget has just been one of those intermediary important policy announcements. We all recognize and witness the signing of 2 important trade agreements. The EU trade agreement, which got signed on the 27th of January, and we had the US FTA that got signed. The reason I bring this up is because any trade agreement has the requirement of doing trade, this is buying and selling of goods. Now, the reason I want to kind of emphasize and I'd seek your attention is that when you look at FTA that India has signed with, for example, the US, now to a great extent that will bring in the demand factor. So once the FTA gets operationalized, which we expect will happen in the next few months, there is going to be a demand for goods. Now, whilst the demand kind of is secured in the form of the FTAs, and by the way, US is just one of the 13 FTAs that India has signed, you also have to worry about the supply factor. The supply factor from India point of view is the whole Make in India, the whole manufacturing, the whole sourcing of goods from India. In the budget, the government has given some very unique, bold moves to encourage manufacturing and production in India. And that's the reason why the budget has very nicely been positioned between the two FTAs, where you have your supplies kind of side covered, and you have the budget which has laid out the platform, or I must say the springboard of the Indian manufacturer, the production houses, to go back and see, okay, this is where I could really increase production and I could bring in more efficiency. So the writing is on the wall as you read this. You have the supply side secured. You also have the manufacturing side secured. Now, how have you secured the manufacturing side? You know, we were doing a survey. The government, as you know, has announced a bunch of incentives in the last few years. These incentives, starting from the production-linked incentives, there are various other incentives. I won't get to the details. But our survey indicated that corporate India actually have not spent too much time in understanding these incentives and making use of these incentives. I don't know if you know if these incentives that the government has announced in the last 2 years, whether it's state incentives or federal, if the corporate India takes a proper use of it, many companies can actually get 25% of their capital cost waived off just because of using the incentives. So the fact of the matter is that people feel that it's perhaps more paperwork, compliance, and at the end of it, I won't get the benefit. These are not the tax holidays. These are incentives which are linked to your own manufacturing. And as I mentioned to you, when you have capital equipment coming into a factory, 25% of their costs, to that extent, you can really get the benefit. So using those incentives, and also a few incentives announced in the budget, I think is an important element to create the platform for manufacturing. Specific to the budget, the government has focused on a few sectors. So we heard about rare earths, perhaps for the first time. We heard about sectors like biopharma. We heard about semiconductor in this budget. All these are incentives given to these sectors. You know, in last year's budget, the finance minister had announced something called a state investment index. Every state has an investment index, and that is the reason why there is a very healthy competition amongst each of the states. And that's where you see invest in UP, invest in Orissa. These are the local kind of state-driven incentives that are given to the government. So what is it in particular that this budget had for boosting manufacturing and also boosting the larger ecosystem? You know, for the first time in the history of our country, we had a budget document which had the heading called Ease of Doing Business. It has never had this heading in the past. We always had direct taxes, indirect taxes, production, agriculture. We have a heading in this budget document which says Ease of Doing Business in India, which clearly indicates the intention of the government that they are pretty much backing, giving whatever is needed from their side. And I know there are challenges. Our country is not a small country. It's not going to be a big bang announcement. No budget is a big bang announcement. But the fact that you have ease of doing business as an intention of the government, that kind of comes out of this. The second, perhaps for the first time that I've seen, and I think all of us have seen, this budget has given a tax holiday for 21 years on one of the provisions. And that provision is with regard to data centers. So as we know that India houses about 20% of global data, but it has only 3% share in the data centers. What this budget has done, that it has kind of proposed that when foreign companies are investing in India, they're providing services in this space, the income that they earn from this space will be exempt from tax for the next 21 years, which is up to 2047. Now, this is again a bold move, as I say. It's a punt. It's a very, very calculated punt that the government has taken, but it will certainly give a lot more opportunities to the Indian entrepreneur as well, and the whole ecosystem around it. What do you expect out of this announcement? I expect outside of Mumbai, outside of many of the larger cities, when you have the tier 2, tier 3 cities, there'll be zones that will get created. There'll be aero cities of sorts or SEZs of sorts. These will be owned by one large real estate player, and they will be giving units which will be hosting the data centers. This is what we expect as a result of this. And look, there's a 21-year holiday, so it's not going to be taken away in a year. So there is clear long-term thinking by the government, which I think deserves to be applauded. The second important point that I wanted to mention, which is also an important proposal, is more particularly in the equipment, in the consumer equipment manufacturing sector. And this again directly goes into the semiconductor space. What you see on the slide here is just a synopsis of the benefit, the contract toll manufacturing benefit that is being given again to foreign investors who are wanting to make investments. Now, one important point I'd like to make here, and that is, you'd wonder that these are kind of tax benefits given to foreign investors only. Well, this is one way by the government to ensure that there is sustainable investment in our country, and that's the whole purpose of this event as well. So by that, you have a win-win situation. How do you land up having a win-win? You have a foreign investor who's interested in investing in India, and now that he has the tax holiday, all the more reason he is interested. You have the Indian entrepreneur, which is the Indian entity, which also then prospers to an extent, and the whole ecosystem, which is inflation, employment generation, per capita income, all that kind of moves in the right direction. This is going to be an after effect, but it's not going to be seen in the next few months. Reflecting now back, the FTAs, the demand secured, and here you have the supply secured with the help of these incentives. That is where I was trying to say that there has been a very equitable balance that the finance minister has kind of put forward. Now it's on corporate India to take advantage of this. So we have, what do we expect to see in the next few months? On one hand, you will see a lot more conversations about the FTAs being operationalized. So for example, the EU FTA, they'll go to the EU Parliament and they'll get signed over there, approved. The US will have its own kind of route. It'll take about 8 to 10 months for these to be operationalized. By that time, these incentives will somewhere get digested in the Indian entrepreneur system, in the manufacturing companies that we have here in India, and they'll start putting their plans as well as putting their initial capital investment. So in the next 1 year or after a year, when you have both these demand and supply secured, you can imagine the amount of efficiency and the productivity that will increase in the country. So this is on hardcore real sector, and with the help of ancillaries like the data centers as well as electronics manufacturing. This is a nuance. It's not coming out directly from the budget, but after doing the analysis of the budget, this is what we could derive. Now, in the next couple of slides, I'm just going to kind of give you some blips. I know a lot of material is already there in the last 1 week. You would have read, you would have understood, learned, listened. But I think a couple of important aspects that you see over here, some of these did cause some turbulence in the stock markets, for example, the STT, etc. The government is also inclined to simplify the tax law. We all recognized and witnessed that in the last few months, the government again has not only formalized, but also institutionalized the new Income Tax Act, which is the Income Tax Act 2025. The government has already announced that this will come into effect from 1st of April 26. Look at the speed at which all this is happening. The rules and the forms will all come out before 1st of April 26. The purpose of this law, A, simplicity, B, removing uncertainty, and 3, most importantly, trying to remove as much of multiple interpretations that one can get from a tax law. And the government has done a phenomenal job. I'll give you an example. This new act, the Income Tax Act, has 53 tables as part of the act, whereas the current Income Tax Act, which is a 1961 act, has about 20 tables. You know, if you have information or law in a tabular format, you can imagine how clear it can be for someone to understand. Doesn't mean that we will not have litigation, but it is recognized. I think there is an intention to reduce the litigation in the tax world to a great extent. So some of these provisions, and as you see, simplification of the tax law, you also see decriminalization. The government is also kind of conscious of the fact that there are a lot of penalty provisions in the tax law. They've recrystallized those to be fees. So the idea is that they are really wanting to give whatever they can